This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets. The OPEC Plus group produced almost 3 million barrels per day less crude than foreseen by its quotas in June as sanctions on some members and low investment by some others crippled its ability to assuage the world's energy crisis, a report showed Friday. The development is a further setback for the U.S. administration of Joe Biden, which had been hoping that OPEC could raise output to compensate for Russian supply disruptions and slow down rising fuel costs and broader inflation. Russian Interfax news agency, citing a source familiar with the data, said level of underproduction by OPEC Plus jumped to 320% in June from 256% in May and 220% a month earlier.
The European Union clinched a deal this week to cope with a gas supply crisis, but to make it work member states need to establish bilateral pacts to share gas and, right now, most have no such agreement in place. Only 6 such deals have been secured, leaving most of the EU's 27 countries without firm terms on how and when they would share gas in a supply crunch, or the financial compensation they would give or get for doing so. Bilateral deals are really the only thing that will hold at the end of the day if there is a real supply crisis, Christian Eggenhofer, Associate Senior Research Fellow at the Center for European Policy Studies, said.
Moving on to the top news in the energy sector.
A rally in oil prices could stall as recession fears and COVID flare-ups in China slow demand and counter supply risks from sanctions on Russia and OPEC plus output constraints, a Reuters poll showed on Friday. A survey of 35 economists and analysts forecast Brent crude would average $105.75 a barrel in 2022, down from a forecast of $106.82 in June, marking the first downward revision to the monthly poll since April. The global benchmark has averaged about $105 a barrel this year.
U.S. crude oil production slid in May by about 0.5% to its lowest since February, according to a monthly report from the U.S. Energy Information Administration on Friday. Oil production fell to nearly 11.6 million barrels per day in May from 11.65 million barrels of oil per day the month prior, the report showed. Output, which has been recovering from the impact of the coronavirus pandemic, remains far below its record high of 12.3 million barrels of oil per day in 2019. Production in North Dakota rose 17.1% to about 1 million barrels per day in May, highest since March, the report showed.
Next, we have the top news in metal markets.
India launched its first international bullion exchange on Friday as the world's second biggest consumer of the precious metal tries to bring transparency to the market for the precious metal. India International Bullion Exchange, IIBX, based at Gujarat International Finance Tech City, or GIFT City in western Gujarat state, could lead to standard gold pricing in India and make it easier for small bullion dealers and jewelers to trade. We would have better price negotiation strength with the launch of this bullion exchange, India's Finance Minister Nirmala Sitharaman said.
Copper prices touched their highest levels in 3 weeks on Friday amid renewed supply concerns and after U.S. central bank authorities signaled slower interest rate rises. The metal mainly used in power and construction has a tight supply backdrop, with inventories sliding and miners scaling back production plans. 3-month copper on the London Metal Exchange, LME, climbed 2% to $7,913 a ton by 16:20 GMT, its highest since July 8 as it remained on course for a 6th straight day of gains. The U.S. economy unexpected contracted in the second quarter, data showed on Thursday, which could deter the Federal Reserve from continuing to increase interest rates aggressively to battle inflation. We will now look at the top news in the agricultural sector. China's securities regulator has approved trading of soybean and soyoil options on the Dalian commodity exchange, it said on Friday. Options trading for the Dalian exchange's soybean contracts and its soyoil contract will begin on August 8, the China Securities Regulatory Commission, CSRC, said in a statement. This adds to the exchange's existing agriculture products options such as soybean meal, corn and palm olein. The Dalian exchange also has options for other contracts such as iron ore and liquefied petroleum gas. China is the world's top importer of soybeans and largest consumer of various raw materials.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.